HMRC have written to some of the most popular retail investing apps to tell them that current legislation means that fractional shares are not okay to hold in an ISA, and this is a big deal for anyone who holds fractional shares in an ISA. So I decided to dig in today and see what I could find out about all this, and I've quickly put this video together to try to work out what it means for normal people like you and I who, well, just want to invest and try to look after our futures, you know, the way the government have been asking us to all this time. So why are fractional shares so important to retail investors? Well, there's a lot of good companies that people want to invest in that are also very expensive to do that. Fractional shares allow retail investors to spread their money across a lot of different companies to create this healthy diversity in your portfolio. So all your money doesn't have to go into one place and suffer the risks of that. So for example, a share in Apple will cost you about $180, give or take. And that means unless you can stump up $180 in one go, you can't buy a full share of Apple. Microsoft, similar, it sits around $330 at the minute. So fractional shares means I can buy a little bit of Apple and a little bit of Microsoft even when I don't have enough dough for the whole share. And this is cool because some of the more modern apps like Trading 212 or InvestEngine will let you invest with as little as £1 in a stocks and shares ISA. That's great for anyone who wants to start investing and great for anyone who wants to continue drip feeding funds into a stocks and shares ISA. I mean, it's great. The advent of fractional shares has lowered the barrier for entry so low that just about anybody can start to invest in a tax-free manner. Being free from tax, then over the years you have the opportunity to build up a really nice pot, and fractional shares are part of the flexibility. They give you an awful lot of choices as to how you're going to put that pot together. Every penny can be working for you if you want it to. So why are HMRC suddenly taking aim at fractional shares? Well, HMRC don't reckon that fractional shares belong in an ISA. It's as simple as that. It's not that HMRC have an issue with fractional shares as a concept, it's just they don't think they are a valid asset to hold in an ISA specifically. No trouble holding them in a general investing account where all the usual UK taxation rules would apply. HMRC recently had a meeting with some of the industry's leading lights and government officials, at which point they reiterated their stance that this type of investment could not be held within an ISA despite the protestations of various platforms disputing this particular interpretation of the legislation. So their problem goes back to a definition set out in 1998 of what can and what can't go into an ISA. And to be honest, I'm not getting into that now because I'm more interested in what it means for you and I if they are right rather than whether or not they are right, if you see what I mean. I'll leave a link in the description below if you want to go and see the legislation for yourself, but I think mostly their trouble is that in some cases at least, a fractional share isn't really a share distributed from a company, but rather an agreement between you and your investment platform to hold a portion of a share, a derivative, I suppose, of a sort, and thus that sort of product doesn't belong in an ISA. It's a bit of a shame because fractional shares are very much aimed at retail investors, and retail investors aren't the sort that are going to try and pull some moves in their ISA of all things. People out there are just trying to invest and trying to use their money well. So what happens if HMRC get their way and the fractional shares are banned from the ISAs? Well, the short story here is that if they do indeed get their way and it is in fact decided that fractional shares can't be in an ISA going forward, then it could force investors to sell out of any fractional positions. Then on top of that, there's the implication that there would be a tax bill to pay since these fractional shares shouldn't have been held in a tax-free wrapper in the first place. So that would be pretty ugly to say the least, and potentially disastrous to anyone who had been planning their investing for any length of time. There would also be a ton of unknowns which I can only really speculate on at the moment. Like, would you be forced to sell your fractions? Could you consolidate them into something else? Could you move them into a cash ISA maybe? It's a very confusing time for investors. Apart from anything else, it feels like the goalposts are being shifted for investors like you and I, and that doesn't really sit comfortably with me, I have to say. So you see, on one side of the coin you've got HMRC saying that it's not okay to hold fractional shares, and on the other side of the coin you've got three main groups of people, as I see it. People like Jeremy Hunt, who are seeking ways to simplify ISAs and get more people investing. There are the platforms themselves who are offering these products and have done for years, and of course there's the FCA who authorise and regulate these companies, kind of sitting alongside them, and that's a weird one, because it would be very interesting to see what the regulator has to say about HMRC's position on fractional shares in an ISA. Now I can tell you, having dealt with the FCA before and their representatives, they are a tough nut to crack, and I have to say that if there's suddenly real heartache for investors here because of fractional shares being offered by different platforms, then why have the FCA given their approval to so many platforms for so long? You know, if the FCA haven't had a problem with fractional shares in an ISA for so long, but HMRC do, what are the public meant to think about what's going on here? The very fact these products have been offered on the FCA's watch, if you like, means that for so long now the FCA have given their blessing and said okay to the idea of offering fractional shares inside an ISA. As a consumer, I look for proper regulation on anything really, because I want to know I'm being looked after by somebody that knows more about this stuff than me. So I have to say, when I see HMRC and the FCA on apparently opposite sides here, it's a wee bit concerning. So why now? Why wait so long before the HMRC wanted to go public with this? And I'm thinking maybe it's the rise of more and more of these investing apps. Each new player on the market seems to offer fractional shares, and maybe it's just that now is the time to adapt the rules or get a discussion moving to modernise the legislation. I don't know, throwing out these sort of headline grabbing statements would be a weird way to go about that. But it is worth noting that some of the old guard and more established providers like Vanguard and Hargreaves Lansdown, they don't offer fractional shares, and I just wonder if they've known something about this all along. In any case, if HMRC get their way, I alluded to it earlier, there'll probably be a tax bill to pay. So where would that leave you and I? Well, I thought it was very interesting to see this quote from HMRC. Our long-standing view is that a fraction of a share cannot be held in an ISA. When an ISA manager allows investment in non-qualifying assets, we would seek to recover any tax loss from the ISA manager rather than the investor where possible. Well, from that, it looks like it could be the platforms that could potentially have a fairly hefty tax bill to pay rather than just the man on the street. If this one does indeed go the distance, I can't imagine the top dogs in pretty much every modern investing platform are going to love that very much. I suppose the knock-on effects could range from fractional shares just being pulled from the platforms, or there's maybe even a risk that the platforms would try to introduce more ways to recover that bill from their customers, maybe in terms of more fees or charging for different services that they don't currently do already. It's just an idea. It's all speculation. I really don't know what happens next. One thing is for sure, it leads to an awful lot of uncertainty, and if there's one thing investors don't like very much, it's uncertainty. I think if the government wants us all to invest and try to look after our futures, then my opinion is this needs to be sorted out one way or another, and pretty quickly too, so we can all be confident we are putting our money into something reliable and worthwhile, a bit like what we thought we'd been doing all along. I think we could all do with a little less moving of the goalposts. I'll see you in the next one.